Good afternoon. George Cavaligos for Naked Trader. If you would have told me this morning that gold would have been down $6, silver would have been down 45 cents, almost $2 lower in crude oil, I would have said that the bonds would have been up half a point. Bonds are down 2 ticks, notes are up a tick, and the Eurodollars are down a tick and a half to 2 ticks. I don't know what's going on right now, but it just feels like people are taking chips off the table in the commodities. Even though you're getting all these bearish signals, silver and gold put up big outside days with big reversal candles. The US dollar is still lurking near its lows. There's a lot of different divergent moves going on, and I think we want to play it close to the vest. You guys know how much I dislike the refunding and the treasury auction process. It's an unfair playing field. The dealers know where all the bids and offers are for the auctions, and we don't know anything. I tend to keep positions small, and after getting out of some shorts on Friday, I thought we'd get a little bit of a bounce today. You know, the 118.13 to 118.18 area, which is today's high at 118.18, is kind of a significant resistance point for me here. Previous fourth wave resistance levels right here. I'd like to say we're supposed to be putting some shorts back on here, but starting the 3 or tomorrow morning and very little data, I think we're supposed to keep our powder a little dry here, guys. I think we may see some higher levels here. 118.27 is the next big resistance point here, and then 119.07, there's a big cluster of highs and lows up around there within a 50-day moving average. I think we're supposed to be a little cautious here. Let's see how the commodities markets trade overnight. A lot of rumors about peace breaking out in Libya. I doubt that too. But let's be a little cautious here. We still have some shorts on from better levels. We took some chips off the table on Friday. Let's not get aggressive right now in adding back here. I'd almost rather sell a break down below the recent lows than trying to pick the tops here. Took some chips off the table in the personal account on the precious metals. Still long some silver. I think that's still a good position. That's from a long time ago, that long position. I don't want to get out of that because of the weakness in the dollar, and I think that dollar is still going to be the trump card here. Fed Governor Yellen was out this morning talking about it's too early to remove stimulus. The dollar sold off a little bit on that but didn't make new lows. You want to keep an eye on that dollar index, and if that thing starts breaking down below these old low 75-cent lows with any kind of volume, I'm going to jump back in on the short side on the treasuries, and I'm going to jump back into my longs in the precious metals here. And I think the dollar will be our key here. It didn't break down this morning with all the other craziness going on and all these divergent signals here. I think we need to be a little cautious right now, guys, and let's keep the powder dry and ready pull the trigger if we do see the breakdown in the dollar index. We'll take a look at the open interest. I got to imagine with the market trading up a little bit here, open interest fell. We saw a big uptick over the last week as people were pressing the short side. And I think today's trade showed a little bit of short covering, but I don't feel like people are getting too nervous. I think we got a decent lead on our shorts too, so let's be a little greedy right now and keep an eye on things.